Hey everyone, it's Daniel here from InfoWest. Hope you're all doing well. So, if you've been noticing, the stock market's been in panic mode since yesterday and even today. Stock market's been selling off, the bond market as well. And the question is, what has changed since yesterday, right? Is there something that happened during the Easter long weekend that made traders kind of upset? Did they not get enough Easter eggs on the weekend? Are they upset because of that? What's going on? Jokes aside, there was actually some data that came out on Monday that caused bonds and stocks to both sell off. And that's why you're seeing the sell off today in the equity markets. Now, what is that data? What am I talking about? Well, on Monday we had ISM manufacturing data that came out. And this data tends to tell you how the manufacturing industry is doing in the US. And it's basically a good gauge of how the economy is doing. If manufacturing is doing well, then that must mean that the economy is doing well also. Now, if you look at the data, the numbers of the manufacturing ISM manufacturing numbers came in at 50.3 versus the expectation of 48.5. So that's way better than expected. The prices component came in also higher at 55.8 versus the expected of 53.3. The new orders came in higher, 51.4 versus 49.8. And the employment component, a little tiny bit weak, 47.4 versus the 47.5. Now, this caused bonds to really sell off, causing those yields to go up. And that's what caused equities to sell off as well. And that's what we're seeing today, the stock market continuing to drop because we've got more data to still analyze. Tomorrow, we've got the ADP jobs number coming out. That will be also very important to watch out for. We have Powell speaking tomorrow as well. It'll be interesting to see what he has to say. We also have claims number that will come out. Get an idea again, the job market. And then, most importantly, on Friday, the non farm payrolls report, which comes out from the government. It's the most anticipated number for the week. It's the one that the government and politicians, bankers, and traders out there look at to see how's the job market doing according to the government. Now, if the data is looking strong, which it is right now, then it basically suggests to you that the economy is strong and resilient and is doing fine. So if the economy is doing fine and it's resilient and strong, then why the sell-off in the stock market? Well, the main reason is because it's all about these rate cuts. Now, if you remember, Powell promised us 3 rate cuts this year. He can change. He's always changed in the past. He's always said one thing and then done the opposite. He's always been wrong. He's always been late. But is Powell going to change much this year? Is he going to maybe cut down to 2 rate cuts instead of 3? Maybe 1, maybe none? Or is he going to do a hike if data and inflation skyrockets? Well, it doesn't look like a hike is coming for now. But the cuts, on the other hand, are being reanalyzed by the markets. And they're trying to think that, okay, with the strong data, strong economy, why should you cut more? Now, we did have today some Fed members come out. Mester came out, and she's known to be quite hawkish. She's pro rate hikes, pro, stalling on rate cuts, not cutting too soon. She came out and said that we're not cutting rates next month, which is May, and that's when their meeting is. But we do expect rate cuts are coming, and we do expect that we are still going to cut rates. So being a Fed member being quite hawkish, coming out and telling you that, yeah, we're going to cut rates, is quite the telling sign that even with the economy still doing fine, they still expect some rate cut this year. Whether it is 2 months, 3 months, 4 months, 5 months from now, it doesn't matter. But it's coming, it looks like, according to Mester. Now we gotta watch what the other Fed members say as well. But it's very interesting that she, being a hawk, coming out and sounding actually dovish here. Now we'll have Powell. Powell will also say something. We heard Powell last weekend, basically say that they're not in a rush to cut rates. Mester also said the same thing, that we don't want to cut too soon, don't want to make a policy mistake of cutting too much also, because they don't want to reignite inflation again. So it'll be interesting to see what Powell has to say tomorrow in terms of rate cuts. So they still view those 3 rate cuts, especially in May and especially the next coming meetings as well. But in order to get an idea, well, somewhat of an idea, I can't really be perfect on this, it's to figure out that are we going to see some sort of stronger data this week? And that's going to be the key telling sign that are the markets going to maybe throw a tantrum because they expect that maybe no rate cuts are coming or very few rate cuts, less than anticipated. That's going to be key. Now, the markets are funny because they were doing fine before as the Fed were not cutting rates last year, as talks about maybe cutting rates but not cutting rates. The markets did fine when also they were expecting in March for some sort of rate cut, but it didn't come true, and Powell threw cold water on that. So why not now? What's the fear now that if we don't get the rate cuts soon enough, why should we start to see sell off now, especially if the economy is doing fine? So these are all questions to ponder and think about. Something to watch also, the price action in the stock market, how the bonds also react, especially with its yields. And what's going to be also very important is that after all of this, right, even if the Fed decides to cut rates, as the economy is still showing, according to the data, its resilience and strength, what's going to be very interesting is that if they do cut rates, or when they decide to cut rates, what happens next? Do they pause? Do they continue cutting? And why to cut if the economy is doing fine? Is there something that the Fed is worried about? Commercial real estate that's coming due, the real estate market? Is it that the government debt is inflating and they're worried about the government imploding? Or is it politics because of elections coming up and they got to start cutting rates because they're getting pressured? And it's all purely politics. Whatever the case may be, so far, right now, especially with Mester's comments today, it seems like they're still continuing with the rate cuts, even though the economy is still showing its strength. So anyways, those are my 2 cents. Let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers. Bye.